Hey, everybody. Thanks for joining us. I'm your host, Kim LaRue. I've got my buddy Lee Duffy over in the UK.
Hi.
We are going to be going into our weekly prediction video. So we will see how we did last week. We did a little bit of a long prediction because Ghost was sick. Ghost is back up. We'll be doing our short prediction this week as well. So let's get into it. Thanks for joining us this week, everybody. As we said last week, Ghost was a little bit sick, and we did do a longer-term prediction on that. We will be doing a shorter-term prediction in a moment, but first, let's check back on that long one. Lee?
Hi, Kim. Yeah, so last week we looked at pound US dollar for a prediction, and we made two parts of that prediction. And let's see how we did. So on screen, we can see pound US dollar, and right at the center crosshairs in the red was the exact time and price level that we made the prediction. And if you go back to the video, the prediction was it would get to the upper ends of 1.24, even as high as 1.25. And then I suggested that it would potentially start coming off and heading down in this direction. But things have changed.
And the important thing to remember here is that you can predict things out, but there are changes. It's never going to be perfect. And what's important is that you know there is going to be something different so you can adjust your strategy, right?
Exactly. And this is where it's useful for traders. Here on this chart, we have this new high being shown on the chart, and that wasn't there last week. We had had a number of these highs showing us at the 124, slightly into the 125 level, and that was the basis for that prediction. And then I was expecting it to come off and go back down because we didn't have any new highs. Now, with Ghost being able to show us what's changed in the marketplace, we can cross-reference different pairs together to give us a new view of where we think things are going to go. And I'm going to take us to Euro US dollar next, and then we can come back to pound to see where we think the next part of the forecast may be.
So what's the significance with Euro US dollar in association to what we're discussing now?
Typically in ForEx markets, we find that pound and euro, although they're different currencies, tend to move together versus the US dollar. So the power of Ghost is you can get a view of where one pair's going, look at another one and see if they're similar or different in terms of understanding where the predictions go. The more information you have, the better you are to interpret it.
So the more information, the better the interpretation.
Indeed. So moving over to Euro US dollar, things have moved on since last week. And what we've seen is kind of very interesting. We've got this spike here, and we've got two very large ones. Now, those spikes make new potential highs, and they're quite a way off. So what we're looking for is in the short term to build up a picture of the evidence as to why it's going to be going in that direction. And if we zoom in, we can see a red area and we can see a flow area. And we know from years of research that the real price will try and go around the red blocks, the red areas shown on the screen. And that's how we know at this time it's going to be a long. And that means it's much more likely to move higher than it is to go lower.
So everyone's getting a little bit of a lesson in how to read Ghost here. And when you're saying those yellow spikes, that's generally where it's going to go to, right?
Well, they're what we call levels. Ghost is excellent at picking out future levels. And a level is a point where the price gets to and then turns around again. Now, we have got three distinct levels in the future for euro. They are 117, 112, and 114. And that is quite a big difference from the current price. And it will be very surprising to people that we could predict such prices for the euro. We do have a potential pullback zone shown on the charts, and that is at 106. And we may get a pullback into that zone. But if we do, it's going to come down, touch that line, and head up. my prediction for euro is it's going to probably get in the next 2 days, probably into the 111 zone, which is up here. So what I've done is I've clearly put on what the levels are that it could get to. I am not expecting it to do a pullback at this time. So I'm expecting it to get up to these zone, up to these levels before it goes back down to 106.
All right, so now we've been looking at US dollar euro. You're going to go back and show us how that pertains to the pound?
Right. So we've seen that the euro over the last week has made an indication of future highs. And we've got 3 levels that are new on euro that weren't there last week. If we look at the pound, what we're expecting to see is a correlation with euro. And what is new is this spike here, which is showing 128. And again, that's quite a long way off from where we are at the moment. But if euro is going to go up, we would probably expect pound to go up with it because they're both crossed with the dollar. But what we also need to do is we need to think about this projection in conjunction with the MKT risk index. And if we start to see big spikes on the MKTRedline product, we'd expect the euro not to go up and to come down.
So the amazing thing about this is, yet again, you nailed your prediction. I didn't know if we were going to get 3 weeks in a row or not, because again, we're predicting the future and it's never 100%, but we're talking about 3 weeks in a row where you have been exact. And I didn't expect that. So how far out was that prediction again?
It was 113 hours, Kim.
So 113 hours in advance, you told us what the price was going to be. And then we are able to also see that there's going to be a fluctuation in the plan and adjust to that.
And every trader knows that market prices don't move in a straight line. The question is it going to move in that general direction? And can I make a trade that I won't be stopped out before it reaches that view?
So considering how amazing these predictions have been, Lee, let's see how our traders have been doing.
Well, we've just closed our March books and we're coming in at an astounding 8.1% gross for the month.
Yeah, that's amazing. And by the way, they are using these tools. So let's see those results.
And as you can see from the history, that's a reasonably good reflection of what we've done in the past and is, it's really high. I mean, most people would be delighted with that on a return in a year. And here we are with an 8.1% gross in the month.
That is actually pretty amazing. That's top tier trader returns, right?
It certainly is. And the key thing is MKTGhost and MKTRedline just help because they suffer less losses that you then have to recover. And that's the elements that make the difference in the returns.
And especially using MKTRedline, they're able to dodge all those negative market events, right?
They do. And how they do it is they just basically, when there's a big alarm going, they either immediately hedge all positions so they can't get hurt, whatever happens in the marketplace, or they close out trades, particularly if they're in profit, where there's no further risk.
Yeah, because that's one thing. You can make profit all day long, but if you end up losing it, it's gone. So that's one of the things we always, stress with everyone. Even if you're not a trader, if you have money in the market, MKTRedline Gauge is definitely something that you'll want. And if you go to MKTRedline.com, you can get it. All right, everybody, thank you very much. I've got trader outstanding results. The predictions have been dead on. We'll see if we're on for next week, so come back and see us. And hope you have a great week, everybody. Thank you.